what you're looking at in these charts from Bespoke Investment Group from January 23rd, 2026 is not a bull market victory lap. It is a leadership transition and potentially a regime change. So today's goal is not about prediction, it's about diagnosis. And the charts do not lie if you know how to read them. Let's begin with the top one. 2026 year-to-date percent change. So the x-axis lists asset classes and index segments. The y-axis shows percentage change year-to-date. And the green bars are the gains and the red bars are the losses. I'm looking at the top left chart. And it shows clearly that the MAG 7 are slightly negative. The S&P 100 is negative. The S&P 500 is barely positive. The mid-cap strong still. The Russell 2000, which is basically the small cap stocks, outperforming. And the Russell macro caps leading the entire market. The micro caps are the very small companies, less than 2 billion in, even much than that, in market caps. On the right, you could see that year to date, this is 2026, this is where you want to be. You want to be in the micro caps and the Russell 2000. Although I will say that in the past, what I talked about is the fact that be careful. Once, and this is what's been happening historically. Now, is this going to keep happening? I don't know. But we've seen that, in fact, they only get in there. So let's make sure that this is what's happening. But that's where we are. Okay, now this is capital rotation. This is what we're talking about. This is capital rotation. Why does this matter? Well, for over a decade, market leadership was narrow. Mega cap tech, low volatility, passive flows, index concentration. That era is under pressure. When equal weight beats capital weight, leadership is broadening. When micro caps lead, risk tolerance is shifting, but also fragmenting. Don't forget, there's a lot of money going into the system right now. Tremendous amount. They need to find a home. And rates are on their way down. So that combination has historical consequences, I believe. Nasdaq 100. Now let's move to the top right chart, which shows the Nasdaq 100 since 2025. Now, of course, the Nasdaq 100 are the basically top tech companies. What are you seeing? Well, price trends over time. The 50-day moving average is drawn and price remains above the 50-day moving average and trend channel slopes upward. This is technically bullish, right? But be careful. What is missing? There's no acceleration, no breakout momentum, and no expanding slope. It's above the 52 moving average, but it might be starting to get exhausting. This is trend maintenance, not leadership expansion. The Nasdaq is being carried, not pulling the market forward. So historically, when the Nasdaq stays up but stops leading, it signals late cycle behavior, not early cycle optimism. Look at the bottom left, the Russell 2000. Now we're looking at small cap companies. Bottom left. Look at it. Strong recovery of the 2025 lows, sustained trend channel, repeated support at the 50-day moving average, and higher highs and higher lows. Since April last year, what it tells us, this is not a dead cat bounce. This is persistent accumulation. And this is why I want my members to follow and understand what's going on in this market and way to take advantage. This is what this is what the channel is about. We're looking for risk and try to understand what's happening. There's certain risk, but there's also opportunity. I come to my members on YouTube or on the Patreon channel every morning, between 8 and 9, and telling them this is what's going on. This is what I'm doing. Take advantage of all these very complex situations. So small caps are benefiting from domestic exposure, less exposed to global margin compression, positioned for nominal growth, not multiple expansion. Here's what's happening here. So in terms of historical context, small cap leadership has appeared in the late 70s, early 2000s, and post-inflationary resets, but it often coincides with volatility, not stability. So this is what you need to look at. Now next. Now let's take a look at the bottom right chart, the famous Mag 7. So how to read this chart? Well, the price is flattening. The momentum is changing. And frankly, it is, look at it. The price is flattening. The momentum is fading. Repeated failures to extend highs. Support zones being tested. This is not a collapse. This is exhaustion. Look at it. The Mag 7 are minus 30% of the S&P 500, more or less, approximately. The embedded in pension, embedded in passive flows, embedded in volatility suppression. When they stop leading, index stability becomes fragile. This is exactly how concentration risk unwinds, slowly at first and suddenly. So, what does this all mean for investors? This is not a crash call, first of all. Right? I'm not telling you the market is going to crash. Not a bear market signal. It's not a timing signal. What this is a leadership fracture, a risk dispersion phase, a regime transition warning. In these environments, correlation rises unexpectedly. Diversification behaves differently. Passive strategy underperform active risk management. The market stops rewarding size and it starts rewarding selection. This is why this channel is important, because what we do, we look for what's going on and what should I be looking at? What's really going on? What is a trend? In the final section, I would say this. The big takeaway is as follows. This is not about being bullish or bearish. It is about understanding where returns are coming from and where risk is hiding. When the macro caps lead, macro caps stall, equal weight beats cap weight. The message is clear. The index is rising, but the market underneath is changing. And that history tells us that markets that change quietly rarely stay quiet for long.